Bitcoin's price continues to hover over 70K as the ETFs had their first day of inflows after 5 straight days of almost 900 million in outflows. Are we beginning another several week stretch of positive inflows from these ETFs? Has the real money even started flowing in yet? After the halving in less than 30 days, Bitcoin will become more scarce than gold. And somehow, hedge funds have over 15,000 short positions on Bitcoin. Are we going to see a short squeeze? 80K before May? Welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. ETFs had their first positive day of inflows of 15.3 million after 5 straight days of net outflows of nearly $900 million. These ETFs have been the most successful of all time. And just this year alone, BlackRock and Fidelity hold the number 1 and number 2 spots of the most successful ETFs. And we haven't even began to see ETF adoption from the other largest major financial markets in the world, like China, for example, who is soon to likely approve a in-kind Bitcoin ETF on their Hong Kong exchange. But as successful as these ETFs have been so far, the real big money has not even come yet, as most of the money has come in from venture capitalists, hedge funds, family offices, and retail investors. But the real big money? Those are countries, endowments, pension funds, insurance companies. These are all the players that are coming next and have just taken several months to begin moving. Listen to what the CEO of institutional custodial company BitGo has to say about this.
Bitcoin, we've got the halving coming up as well, potentially another underpinning of price. But who's been getting into these ETFs? Have you been able to monitor flows, Mike?
We have a little bit. Actually, so far, I think it's been mostly the smaller ticket sizes. So remember, institutions move pretty slowly, pretty glacially, frankly. I think we've seen a wave of retail here over the last 2.5 months. I think it's getting a little bit bigger, but the institutions, we've seen some smaller hedge funds come in, larger hedge funds will come in, pension funds are coming, and endowments are already here. So now that we have an ETF available, which is the distribution channel, which makes it super easy for everybody to participate, it takes a little bit of time to go through investment committees, but I think that we're starting to see that run up happen now, all through the summer. It rhymes, so you should say it, 80K by May.
The net result isn't just going to be the flows that we see into the ETFs themselves, but the multiplier effect. Listen to what Swan CEO Corey Clipson has to say about the multiplier effect from the ETFs.
Hey all, it's Corey, CEO of Swan. Wanted to give you a quick rundown on what I've been calling the ETF Multiplier Effect. So this is the hypothesis that because of the existence of the new Bitcoin ETFs, more capital will flow into Bitcoin even outside of the ETFs than would if the ETFs didn't exist. And now we have more than 2 months of data showing that more Bitcoin is being purchased through non-ETF pathways, and by a significant margin. I know you've probably seen lots of tweets from Bitcoin-only brokerages, whether it's River, Strike, Swan, Unchained, everybody's pretty bullish. I can tell you that I think by the 19th or 20th of March, it was already our largest month ever. So this is certainly happening. I actually think that over the next decade or so, it'll be really hard to actually run the numbers on this because you can't really prove a counterfactual. But I actually think the ETF multiplier effect is going to be something like 5 to 10x, meaning that because you have Uncle Larry and Auntie Abby promoting Bitcoin and cutting through all of the altcoin noise and just promoting Bitcoin with their marketing dollars and giving that stamp of approval and that CYA for institutional buyers and financial advisors to say, hey, if it's good enough for Larry, it's good enough for me and good enough for my clients. I think that multiplier effect is something like 5 to 10x more Bitcoin that will be purchased outside of ETF channels because the ETFs exist. So hopefully that helps explain what I mean when I talk about an ETF multiplier effect.
There's clearly a shift going on. Investors are adjusting their portfolios and allocations. Just look at the Russell 2000 as an example. Less than 2% of investors are holding the Russell 2000 in their portfolio, compared to almost 8% near the Great Financial Crisis in 2008. It's only a matter of time before investors realize that holding Bitcoin is going to be more valuable than holding, let's say, the NASDAQ 100. Regardless of what things are changing within investors' portfolios, one thing remains the same. In order to outpace fiat debasement and to maintain your purchasing power, you need to exchange your fiat currency for assets. Let's look at one asset class that people have historically invested in: equities. The S&P 500 made another all-time high last week, and some people are even predicting an S&P 500 price of $7,000. 81% of the companies in the S&P 500 are above their 200 moving day average. Asset class number 2, real estate. House prices continue to climb even as mortgage rates soar. Home prices across the US rose for the 12th straight month. Asset class number 3, gold. Gold continues to sit just below its all-time high, near $2,200 per ounce. And even cocoa beans. The Easter Bunny brought a sweet surprise for investors before Easter this year, as cocoa beans are up 138% year to date and have passed $10,000 per metric ton for the first time ever. This weekend, people are going to be beating up kids for Easter eggs, melting down the chocolate, and selling the chocolate to the highest bidder. But the apex asset that you can invest in is going to be Bitcoin. After the halving, Bitcoin will have an issuance rate of just 450 new Bitcoin minted per day, making it officially harder money than gold, whose supply increases 1.5% to 2% a year. Bitcoin's supply is going to be less than gold at about 1% per year. And that's just the short-term thesis for Bitcoin. As Michael Saylor says, for the next 10 years, we're going to be in a Bitcoin gold rush.
We're in the Bitcoin gold rush. It started in January of 2024, and it will run till about November of 2034. How many people know what happened in November of 2034? In November of 2034, 99% of all the Bitcoin will have been mined, and the last 1% comes out over the next 100 years. So for all practical purposes, the stock to flow ratio of Bitcoin is infinity in 2034. It becomes noise. At the beginning of the gold rush, no bank could custody Bitcoin, no institutional investor could buy Bitcoin, no Wall Street trading firm. When those spot ETFs were approved, that created a fire or an avalanche. The genie's out of the bottle. It doesn't matter who's elected president next. It doesn't matter who's the next head of the SEC. No politician's opinion, no banker opinion, no regulator opinion matters after that date. That kicked off the gold rush.
I want to end this video by making a few final pleas. We all know that outpacing inflation, money printing from the government, wherever your government is across the world, is extremely hard right now. Life is hard for a lot of people across the world, but that doesn't mean that you should gamble. First things first, federal prosecutors wouldn't be going after crypto exchange founders if they weren't committing crimes. KuCoin executives are just the latest in the crypto saga of executives who are being tried and prosecuted for potential crimes that they've committed. These crypto casinos are promoting scam tokens, unregulated securities, and gambling, like Coinbase. On their homepage, you may see things like Bitcoin or Ethereum or Solana or stable coins. But when you go to the trading screen, these are the types of assets that you're going to see. Nobody has heard of these tokens. It's inevitable that when you go to the Easter cookout this weekend, you're going to have some random cousin that's going to come up to you and saying that he created his own crypto token and listed it on Coinbase. I mean, Bitcoiner Will Cole screenshotted a notification from Coinbase for bonk this morning. Use a Bitcoin-only exchange and own real property without having to take the risks that come with gambling to save for your future. Sign up with the link swan.com/daily to get started on your Bitcoin journey. And one final thing. For those of you who have started on your Bitcoin journey, you've been watching these videos, you're finally taking the leap, I want to make another plea. Take self-custody of your coins. Don't just buy Bitcoin and leave it on the exchange, or you might end up like Shohei Ohtani, who's implicated in some weird gambling scandal because his interpreter, or third party in between, accidentally stole $4.5 million of his own coins to pay for, you guessed it, illegal gambling debts. Shohei Ohtani abdicated responsibility for his assets and entrusted a third party or an interpreter to tell him what was going on. With Bitcoin, you don't need anyone to tell you whether you own Bitcoin or not. But that's only possible once you hit the withdraw button. Don't be in a scandal like Shohei Ohtani saying, I didn't know. I didn't know what was going on. You have a choice, and we're telling you now. Take the leap, and if you're afraid, I'll help you along that journey. Please send me an email at daily@swanbitcoin.com, and I personally will help you on your journey to self-custody. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.